Hello and welcome to today's ISTAT Learning Lab. We're going to talk about sustainable finance fundamentals driving aviation towards net zero. And to do that, we have two gentlemen, one in the studio in Paris. That's Jean Chedeville, who is head of global aviation finance at Natixis. And Jean is also a board member of Impact. And in our studio in Dublin, we have Professor Tom Conlon. Tom is professor in finance at University College of Dublin. And he is leading the science group of Impact. Moreover, Tom also runs the Master of Aircraft Finance program at UCD, a program that many young, promising students go through every year, and they feed the industry with talent. All right. So with that, I'm going to hand it over to Jean first, and then Tom, if you could just introduce yourself a little bit more in detail, and then we move on to the presentation. During this presentation, you can write in questions by clicking on the Q&A button at the bottom of the screen. And then to the extent we have time after the presentation, I will go over those questions with our speakers. So please write in as many questions as you want. Thank you. Over to you, Jean and Tom.
Sure. Hi, Niels. Hi, everyone. And thank you for welcoming us today. I'm very pleased to be here with you. So as you mentioned, I'm Jean Chedeville. I'm heading the aviation business for Natixis. Natixis is a financial institution, for those who don't know. It's probably the fourth largest banking group in Europe, and we've been involved in aviation finance for more than 40 years. But I'm not here to talk about Natixis. I'm here to tell you a bit more about impact on sustainable aviation. And before to do that, I'll just let Tom introduce himself as well.
Sure. Thank you. Thanks, Neil, and thanks for the invitation to speak today. As Neil said, I'm Professor of Finance at University College Dublin, where I lead all of our activities in aviation finance and leasing. So that includes our MSc in aviation finance that Neil's referred to. And we're also launching a new professional diploma in aviation finance next year for people who are working in the industry. My research activities are in sustainable finance and in aviation finance. I'm also a research affiliate at the Central Bank of Ireland, where I provide advice on climate finance. And finally, I've been involved in Impact since very near the beginning, and I co-chair the science group with Impact.
So talking about Impact, we'll share a few slides with you when we go through the presentation. Again, I mean, Impact on Sustainable Aviation is a 2-year-old company. It's a non-profit. It started with six founders, Natixis being one of them. So I'm sitting at the board still today. And really, what came to the rationale for us to think about that project was really to think about what is missing in our aviation industry to try to pave the way for decarbonization, to make it more sustainable overall. So it's tackling a lot of different topics with a broad ecosystem. If we go to the next slide, you'll see a summary of what the Impact on Sustainable is about. So today we are almost 40 members. It's a very, very, very diverse group. It's interesting to see that within that group, we have leasing companies, we have banks of the like Natixis. We also have other type of investors. We have university professors such as Tom and others. We have audit firms, we have legal counsels, we have consultants, and all that group come together to try to connect with the broader ecosystem of aviation. And that includes obviously the various MROs, but also the regulators, the policymakers, and the various safety and control bodies. The objective for us is to make sure that we turn all stone and we have a standardized approach when it comes to sustainability in the sector. So when we connect with this large ecosystem, it comes through different ways. There are working groups at the European Commission levels. There are other groups in the US. There are groups also more focusing on finance themselves and group focusing on sciences. We have various work streams internally. And today we're just going to focus on the sustainability finance aspect of things. On that, I mean, the last get together we did, and that was the first Stock Tech Forum that we organized last week in London. Those were a couple of days organized jointly with the US Department of Energy, where we had a first day with a group of people talking about the various issues and solutions that some may have seen in their various fields in order to activate and scale up the decarbonization. The second one was more to regroup in a smaller audience and to design the follow-ups for us to move forward. And we can share a lot more about that later, and there's going to be also a lot of documents available on the website. Here is some of the, this is the group, the almost 40 members. A few ones have been added recently. You see it's, as I said, quite diverse, but really focused on investment on aircraft finance, which is also a key priority for everyone on this call, I understand. In these member groups, you have banks that are NZBA members. NZBA stands for Net Zero Banking Alliance. And that's also the purpose why I'm here today with Tom, is Natixis is an NZBA member. What does it mean? It means that we have designed a transition journey for our aviation business. Actually, we've been asked as an NZBA member to design transition journeys for every businesses of the bank. And this year, we closed the aviation part of it, which took several months. But today we're able to commit, we're able to report what is our carbon intensity for the business and how that will improve over time. This is very similar to what some other type of investors, including leasing company, will have to face or are already facing in the CSRD regulation, where you need to report basically what's your how much CO2 you emit, scope 1, scope 2, scope 3, and what you're going to do about it in the years to come. Our objective is to continue to do business and to grow business. Your objective is the same, so we're quite aligned on that front. What I can tell you about the NZBA levers, there are two of them that we are focusing on as a financial institution. One is the type of aircraft that we finance, and obviously new technology aircraft is preferred. You'll see that their intensity, carbon intensity, is much less. And the other lever will be utilization of SAF. And when you start getting into that territory, you'll realize that SAF, one SAF can be very different from another SAF, depending on the source, depending on the techniques, and depending on the volume available. So it's but I'll let Tom also mention a little bit more of that, and we can take some Q&A at the end of the session. The key objective for us here is to make sure that we have a standardized approach and we share best practices. The goal is simple. We want to avoid risk of underperforming, under-delivering, but also we want to avoid reputation risk, which is a big theme when we think about sustainable financing. And so we want to make sure that we have an ecosystem that is broad enough to get everyone to think about the same objective, and we don't face any of these two issues I just mentioned. And more importantly, that we together build the right tools that's going to help us to scale up the sustainability aviation finance business, and the soonest the better. On that note, I'll hand over to Tom to tell you a little bit more about sustainable finance.
Great. Thanks, John. So I'm sure most of you have come across the concept of sustainable finance in the past, but I want to start with just a bit of background on sustainable financing. So what is it and how does it work? If we think about traditional lending, in traditional lending, a borrower lends money subject to certain covenants. So these might be, for example, the company's leverage ratio, for example. When we think about sustainable financing, what this attempts to do is to incorporate long-term sustainability into investment decisions. And it's doing this by integrating environmental, social, and governance factors. And it can be one of these, or it can be all of these included within the sustainability linked loan or sustainability financing. There tends to be three common forms that we find this. The first of these is green finance. With green finance, the lending is targeted at a particular predefined green project, and they're not intended to be used for other purposes. So in aviation, this might be, for example, a fuel-efficient aircraft, but just it's worth noting that this isn't particularly common. Sustainability-linked loans or bonds, in this case, the use of proceeds is not predefined. But the borrower has to meet certain KPI targets in order to unlock the benefits. So these might be, for example, a reduction in interest rates if emissions exceed a particular target, if emissions are lower than a particular target. What we also see, and probably more commonly see, is that rather than the carrot, where we're getting incentives, there may be penalties. So there might be an increase in interest rates associated with a loan if you don't meet certain targets. And finally, we have transition finance. And this is somewhat similar to green financing in that they're used for a particular activity which is going to help with transitioning towards net zero. This type of lending isn't particularly common in aviation. And the reason, very simple, is that there's a lack of availability of appropriate transition tools at scale in aviation. We might, for example, find it in airports. If an airport was borrowing for a net zero transition, they might be able to avail of transition financing because the appropriate tools are available to allow them to get there. Next, I want to jump into sustainable aviation in finance. Or sustainable finance in aviation. What exactly does that look like? So thanks to our friends at ISTAT, they collect data on all of this. And what they have shown is that there's a small amount of lending in aviation, which is sustainable. In 2023, there was a total of 23 deals that were done that they deemed to be sustainable. The vast majority of these were sustainability-linked loans. When we look at the value of these, or at least the value of the deals where it's available, where information has been made available, about $11.5 billion worth of deals were done in 2023. But I think it's worth noting that about half of these were RCFs, revolving credit facilities, where there may not have actually been a drawdown of the cash. So the implications for that might be minimal for the company which is borrowing. Another point worth noting, and I'm going to come back to this in a short while, is that the vast majority of these sustainability-linked deals were done such that the KPI which they're dependent upon was intensity. And intensity is inherently problematic when we think about aviation. And the reason for this is very simple. Intensity keeps improving within aviation, but absolute emissions keeps going up year on year. So the question I think that we need to ask ourselves is, why don't we see more sustainability-linked financing within aviation? It's a sector which is very difficult to abate, and it seems like a natural candidate for sustainability-linked financing. It's our belief that much of this is due to the use of roadmaps. So roadmaps such as that by the IEA are used to benchmark success in aviation decarbonisation. So in other words, when we think about sustainability-linked financing, these benchmarks, these roadmaps, are used as a target for the sustainability-linked lending. So what are the challenges? What are the problems that might prevent aviation from leveraging up the amount of sustainability-linked lending that's going on? The first of these is the use of a carbon budget. If we go back to the IPCC have suggested that there's a total of a 400 gigaton budget available, carbon budget available up to 2050, if we want to meet 1.5 degrees. That's going to be really difficult to achieve. If you ask many commentators, they say that we're already past that, that 2 degrees is probably the best that we can do. What a lot of the roadmaps do is they use this budget as a mechanism in order to back out roadmaps. So effectively all they do is they take this budget, they break it out on a year-by-year basis, and then they start to ascribe some of the budget towards particular sectors. And what this does, if you look at the most recent one of these, about 23% of total emissions is being ascribed to transportation. Then they break down transportation and they give that about 2.4% of the total budget. One of the issues with this is that it ignores the fact that aviation is reasonably hard to abate. So potentially aviation should be given a higher budget than other sectors. The second thing is that they often assume a constant share of aggregate emissions being given to aviation. So notice the budget that aviation is getting in 2040 is the same as the budget that it's getting right now, which doesn't seem all that rational given that other sectors are going to be able to decarbonize more swiftly than what aviation are going to be able to do. The real problems start to emerge when you look to decompose this further on an airline by airline basis in order to set targets for those individual airlines. How do you go about this? How do you break up the budget amongst different airlines? How much should each airline get? How do you deal with new entrants into the field? How do you deal with airlines that don't report emissions? And in fact, a vast majority of airlines, about 80% of airlines, don't actually report their emissions on a year-by-year basis. So this approach of using a carbon budget is inherently unstable. The second reason relates to roadmaps. There are lots of different providers of roadmaps out there, many different roadmappers. So we have Mission Possible Partnership, we have ICCT, we have UCL along with MIT, ATAG, IATA have come out with a recent roadmap in the last number of months. And I suppose that the main point with these roadmaps is that they're quite diverse in terms of their pathways. They're heavily based on assumptions. One of the key assumptions that goes into these roadmaps is the growth in RPK out to 2050. Some are assuming a growth of maybe 2%, some 3%, some less. And that's one of the key problems. If you're trying to figure out what the total emissions are going to be, it depends on how many aircraft there are going to be and how much flying is going on. These roadmaps might work reasonably well in the short run. Why? Because it's easy enough to forecast what technology is going to be available to us in the short run. We have evolutionary technology, in other words, new engined aircraft. But once we start to look at the longer term, they become inherently unstable. It's extremely difficult to try to forecast when SAF is going to be available, how much SAF is going to be available, and what that SAF is going to cost in the future. And that's effectively what these roadmaps are attempting to do. Another challenge with the roadmaps is they tend to be updated on a regular basis. So for example, if you look at the IEA net zero forecast, on a year-by-year basis, they come out with a new forecast of a new roadmap, in effect. And this new roadmap changes. So if you've signed a legal agreement, you've used a KPI dependent upon the IEA as the basis for which you're going to set up a financial contract, and this changes on a year-by-year basis, this is going to be inherently unstable. There's also a danger, and you can see this to some extent in the plot that we have in this particular slide. Each of these are very different. So there's a potential that an investor or a borrower are going to use a particular benchmark that suits their purpose. And the danger with that is that it could lead to greenwashing. And greenwashing is something that all of the participants, particularly the banks, are trying to avoid. The third challenge relates to intensity, and I referred to this earlier. Most of the deals that are currently being done, most of the sustainability-linked financing that's currently being done is using intensity as the KPI or the basis to decide whether a borrower should be rewarded or not. And what we know about intensity, if we look at the plot on the right-hand side, intensity has decreased in aviation since the dawn of the jet age. But what we've also seen in tandem with this is an increase in absolute emissions due to increased capacity within the sector. If we were to, for example, look at the new EU greenwashing guidelines, airlines will, under these rules, find it very difficult to use intensity as an indicator of their greenness. And in fact, they could be subject to substantial fines if they were to declare that they have the greenest airline based upon some intensity metric. The other problem with intensity, again, if we focus on the plot on the right-hand side, is that it provides very limited indication as to improvement. What we see for all of these different ICCT roadmaps is that they're consistently improving in terms of the level of intensity. But we don't get any indication as to a turning point. When are we going to reduce the absolute emissions that's coming from aviation? What we've done instead is plotted this on the left-hand side. And what we're doing in this is just using two metrics. Those two metrics are the change in RPK of an airline since 2019 and the change in CO2 of an airline since 2019. And what we see ultimately is a move to the bottom right-hand quadrant. And what this is telling us is that the industry is decoupling. It's breaking the link between the increase in RPK and emissions over time. And that's exactly what we need to see in order for aviation to begin to fulfill its requirements in terms of net zero. So given these different challenges, it's clear that using roadmaps as the basis for sustainability-linked lending is very problematic. At times, as we can see on the plot on the left-hand side here, they're going to systematically over or underestimate decarbonisation. The problem being that the roadmap, which is the blue line in this, is based on assumptions. It's not based upon the performance of the borrower. And as I mentioned earlier, this could result in a renegotiation of a particular deal over time. There's lots of other issues. We're using industry-wide forecasts. They might be applicable to particular airlines. Using a roadmap also doesn't account for the characteristics of individual airlines. So are they a low-cost carrier? Are they a full-service carrier? It also doesn't account for success that an airline has already had in terms of decarbonisation. So, for example, an airline which is already using the latest technology aircraft may not be getting rewarded if they're being benchmarked the same as everybody else. So this then brings us to the milestone approach, which is the alternative that's being proposed by Impact. And tied in with this, we have the idea of decoupling. Decoupling is trying to figure out exactly when we're beginning to break this link between increasing capacity and emissions in aviation. So to introduce this, how do the milestones work? In order to come up with the milestones, we require just two numbers. We require the change in RPK for an airline since 2019, that's plotted on the x-axis, and we require the change in CO2 since 2019, and that's plotted on the y-axis. So this is considerably simpler than the current plethora of different requirements that airlines have to report. So based on just these two numbers, an airline, or for that matter, a portfolio of aircraft, will be in one of the four quadrants that you can see on the left-hand side. We then overlay a scoring matrix on top of this. And if you get a score of 0, so if you go along the diagonal on the plot in the middle, so if I can get this to right on it, there we go, along the diagonal here, this indicates no change. So for every unit of capacity that's been added by the airline, we're also getting a unit of extra emissions by the airline. Ultimately, what we need is the airline to move down into this bottom right-hand quadrant here. They can get down to this bottom right-hand quadrant. It means that we're starting to decouple the growth in emissions from the growth in the capacity of the airline. If you get a positive score, this gives you some level of success. We're breaking this link between the delta in CO2 and the delta in RPK. And the only way that decarbonisation of the industry is going to take place is in this bottom right-hand corner. The other thing is that the milestones allow for a comparison between airlines, and they allow for lenders and for borrowers to agree targets for sustainability-linked lending. The extent of the target that's given is up to the parties. So the borrower and the lender agree this themselves. It's not decided by Impact or by any other body. And in addition to this, the rewards or the penalties are decided by the parties that are involved. And crucially, the milestone method also allows for growth in the industry. This growth will be required in the industry in order to ensure that there's sufficient capital available for the transition. If we look at the amount of capital that has been forecast as needed for transitioning towards net zero, it's somewhere of the order of $3 or $4 trillion. So growth is going to be required, and the milestone concept allows for this. In the previous slide, the matrix is somewhat conceptual. in reality, we're going to require considerable further granularity in order to be able to ensure that success is adequately rewarded. In order to try and understand how much granularity we needed, we did very extensive simulations and analysis. What we found was that the trade-off between simplicity and sufficient ability to be able to reward borrowers led us to this matrix, which is at 16 by 16 granularity. This plot also helps us to get a better understanding of the idea of decoupling. If we look at the top left-hand side up here, this box up here, we have airlines where we have an increase in emissions while their RPK are actually decreasing. We shouldn't see too many cases of this, hopefully. Under the diagonal in the top right-hand side, so this gray area here, somewhere there, this corresponds to relative decoupling. So in other words, the RPK of an airline is still going up, but CO2 isn't increasing at the same rate. So this is roughly where we expect to be for the next 5 or so years before we have sufficient SAF available to be able to decarbonize the industry. Under the diagonal in the bottom right-hand side, this blue area down the very bottom here, this is the area of absolute decoupling. And by absolute decoupling means that we're actually breaking this link between increasing capacity and emissions of the airline. New technology aircraft will not be enough to get us down into this bottom right-hand quadrant. It'll require transformative solutions, transformative technologies. It's going to require SAF and potentially revolutionary aircraft when they begin to come on stream. To demonstrate this in practice, we've plotted 2 European airlines. On the left-hand side, you can see a European hub and spoke carrier. And on the right-hand side, we plotted a European low-cost carrier. In each case, in order to be able to give you a reasonable demonstration of how this works, we've used 2008 as the baseline from which we measured the deltas. So for the hub and spoke airline on the left-hand side, we see a small amount of decoupling. In other words, we're beginning to move a little bit away from the trend line, the 0 line here. In the case of the low-cost carrier, this is considerably improved. They're beginning to break this link between an increase in capacity and the increase in emissions. It's evident, though, and the low-cost airline in particular were very heavily involved in refleeting, but it's evident that refleeting isn't sufficient. From refleeting, we're going to get benefits of roughly 20–25% in terms of carbon emissions, but for an industry which is growing at 3 to 4% per annum, this will be very quickly eradicated. And something else is going to need to be done in order to ensure that we're going to get to the bottom right-hand corner. So the other thing I think which is important for this group is that the milestones can also be applied for sustainability-linked lending for lessors in an analogous manner. If we think about a lessor can be treated as a portfolio of aircraft. Each of those aircraft can be leased to different airlines. What we're able to do is calculate the RPK and the CO2 for each aircraft that's in the portfolio. The challenge with this is they have to be estimated. Many of the carbon calculators that are available out there will allow you to estimate both the RPK and the CO2 for individual aircraft. Then a portfolio score is calculated by summing across the total change in CO2 for all of the aircraft and the total change in RPK across all of the aircraft for the lessor. And then from this point, the mapping and the scoring works exactly the same as for an airline portfolio. So this provides effectively a viable option for a lessor to obtain sustainability-linked funding in a transparent manner. It also prevents greenwashing and it allows for tangible rewards to go to the lessor. And we're also looking into the possibility that this may work as the basis for a sustainability-linked lease. At the core of success in aviation decarbonisation is technology, either through various forms of SAF or through new aircraft technologies. And we know, if you look into the footnotes of the annual reports of the OEMs, that they have about $1 trillion worth of new aircraft on order out to the early parts of the 2030s. And there seems to be plenty of capital for this. For evolutionary technology, there's plenty of capital. But when we think about revolutionary technology, so that might be aircraft, that might be power to liquid fuel, for example, or SAF, for example, there's very little capital being invested in these. We believe that the milestones will provide incentives for investment in SAF and for investment in technology, but this is also going to require support. So this diagram shows that the scaling of technology and who tends to fund technology depending upon where it is in terms of its technological readiness or risk. For an airline to decarbonize, they're going to need SAF, but they may not have the available capital in order to be able to buy or to take an offtake on SAF. They may also not have a sufficient credit rating to be able to sign an offtake. This is going to require supports similar to those that we've seen in the broader energy transition. The IEA have recently reported that there's been about $1.3 trillion worth of support for decarbonization in the broader energy system over the 3-year period to 2023. Aviation has seen very little, if any, of this. Were we to apply something similar to aviation, we'd see government grants supporting fundamental research into technology. We would likely see blended finance. So this would be things such as loan guarantees and interest subsidies to support technologies which aren't fully technologically ready, but where venture capital is less willing to support. And this is partly down to the small size of the market. And finally, we'd hope to see CFDs, purchase agreements, tax credits. These could be a low-cost way to support technologically ready solutions, but where scaling has not started to happen. So for example, HEFA. And then the milestones could be used as the targets for these funding approaches. So for alcohol to jet, for example, needs sufficient support that could result in very significant decarbonization for an airline, which is willing to sign an offtake in this area. And we can quantify all of this to set meaningful targets using the milestones. I think that the takeaway from this is that the milestones approach is appropriate not just for evolutionary technology such as aircraft, but also for revolutionary technology, which will be the big game changer for aviation. To summarize the milestones approach and why we believe the milestones approach might be the solution for aviation, it provides a simple greenwashing proof approach to create a viable sustainability-linked financing market for aviation. It creates a robust KPI for borrowers and for lenders to agree on. It doesn't depend on underlying assumptions in the same way as any approach that depends on roadmaps does. It provides transparency to the market and also to regulators. And we believe the latter is extremely important if the market is to avoid penalties, or even worse, if it's to avoid a forced early transition, which we know would be extremely expensive. The other thing about the milestones is that it provides incentives for longer-term investment into the sector. This is the real game changer. This is how aviation will meet its net zero targets. Final thing I want to touch upon is something that Jean mentioned earlier, the Impact Stocktake, which took place last week in London. And this was organized with the US Department of Energy. In a world where there's lots of different related conferences, this one was very different. This conference combined academics who were talking about the state of play in aviation decarbonization. Where are we? What are the prospects for policy? What are the prospects for technology? Alongside practitioners who were discussing their efforts towards sustainability. The forum itself culminated with a roundtable, which was discussing and trying to summarize the challenges that are faced by the industry in getting towards net zero. And these were translated into the impact principles of sustainable aviation financing. And these principles are that we need to promote aviation sustainability measurement, reporting, and communication. We need to try to embed sustainability into aviation finance and leasing. We need to try and quantify climate risk in aviation. And finally, we need to make long-term disruptive aviation investments bankable, which they're currently not. Importantly, these are more than just principles. They're a call to action for the industry. We're currently forming working groups in order to set out specific actions and to contribute to and to monitor the success of these actions So we'd be delighted if anyone is willing to contribute to these working groups. So please reach out if you feel there's something that you could contribute. So please try to be part of the solution. And back to John now.
Thank you, Tom. Thank you for the very clear presentation. I think it's the what I may just add to that is the decoupling concept is not something created from nowhere just for aviation finance. It's something that has been applied in different industries, hard to abate industries, and here it's basically just replicating it and making it available for aviation finance to make sure, as Tom mentioned, we have a sustainable framework to continue to work and support our clients. What I would say as well is the purpose of impact. We don't have a personal agenda. It's really a group of stakeholders of the industry that come together with their problems to find solutions as a group. And what we've seen with this later stock take is that the broader we go, the better it becomes, because now we also get some US regulatory content and policymaker content into the discussion, which wasn't available earlier. And we managed to confront that with the European view and the European regulators and policymakers. I think we'd love to also have closer cooperation with the ISTAT and the aircraft leasing community in general. I think there's a lot of pain points that we still need to overcome as a group, and we'll welcome any feedback on the presentation, questions as well. And actually, we're going to go through a Q&A session, right now with all of you. So this is the last slide. I mean, this is the proposal of impact. It's based on memberships. It's based on members for the members with a broader objective. Clarity is important. Again, we are all subject to some regulations, and we want to make sure that there are clear objectives, clear goals, clear KPIs that can be monitored. We want to make it to scale it up as quickly as possible. We don't want policymakers to come at the back and our regulators to come behind us and force us into something that is irrational. That's really what we're trying to avoid here. And for that, we need to mobilize people and capital. Tom mentioned about capital in aviation, in aircraft, but also in sustainable aviation. I can tell you banks are starting to look at that. We know asset managers are starting to look at that. Lessors are also starting to look into what can they do in the SAF world to be part of the solution. There's a lot of education that's been mentioned a few times. It's a complex problem with a lot of intricacies and a lot of different pain points everywhere. But there are answers to all of that. So again, as a group, Impact is trying to bring some answers to that, to educate people, to make sure that the regulators are educated also about the business we run on a daily basis, and they don't just take a firm view on unfeasible project. Share best practices is the key aspect, and that's also why we're here. It's there are different kind of stakeholders, and by all together sharing our best practices, we're going to find the answer. It's not something that can be done closed door by just 2-3 people, them being financial institutions, scientists, or policymakers. We need to work as a group, and we saw that in the last Stock Tech Forum. A group can bring solutions, and actually having regulators sitting in the same room, it's not happening every day. I can tell you they were quite excited about finding solutions together. So we are quite optimistic on the next steps, and we would welcome more cooperation with all of you. Tom, if you want to say a word, feel free to chip in. Else, we'll be happy, Niels, to go through the Q&A session.
Yeah, look, don't forget to write in your questions. We have one question from Lionel, he says, hi, Jean, and hi, Tom. One very practical question related to the milestone approach. Tom, you mentioned this approach could be used for the different energy pathways, HEFA, etc. But what do you plot on the x-axis of the matrix instead of the percentage delta RPK?
Sure. It doesn't change. In short, the matrix doesn't change at all. RPK remains there. HEFA is a tool. It's one way to get us to net zero. What HEFA will allow us to do, in effect, is this. It'll allow us to reduce the amount of CO2. We want to go in this direction. So the more HEFA we have, the greater reduction we get in terms of CO2, and then the greater increase you get in terms of milestones. So what we're saying is that the milestone concept acts as an incentive. It incentivizes investors to begin, or airlines to begin to use HEFA as one approach to get towards net zero. So the more HEFA they have, the greater chance they have of moving up in terms of milestones, and the greater the benefits that they gain from the sustainability linked lending. Hopefully this answers your question.
Okay, thank you. I was wondering here, apart from CO2 emissions, I mean, there are other Earth warming effects from aviation, such as, for example, contrails. What do you guys at Impact do in that respect?
I can jump in on this, Sean, if you like. The problem with contrails, taking contrails as an example, is there's very significant uncertainty about the impact of contrails. We know that contrails have some effect. It could be a huge effect. It could be multiples of what we get from CO2, or it could be actually considerably lower than what we get from CO2. In fact, in some cases, contrails can actually be beneficial. So in terms of incorporating something like contrails into what we're doing here, it would add a great deal of uncertainty to it. So instead, when you think about contrails, the latest science on contrails seems to suggest that it's relatively cheap to eliminate contrails. You fly at a slightly higher or lower altitude, and that helps to remove contrails. Impact are supportive of any approach to remove contrails. We believe that this might be an easy win for the industry, an easy way to say to regulators that the industry is doing something and doing something active. But in terms of these uncertainties, it makes it very difficult to try and quantify what are the benefits or the losses coming from contrails.
Okay, thank you. We have another question from the audience. Universal Hydrogen, a pioneering US company promoting hydrogen as a sustainable aviation fuel, recently ceased operations. How does this affect the broader advancement of SAF, especially in leading market players, if leading market players are facing capital challenges?
I'm happy to take that one, Tom, if you want. It's
Sure.
I mean, like in any new ventures or new territories, it's always very difficult to have certainty of capital. What we've seen in many industries, and obviously SAF is not protected from that, is that it's very often easy to get the few seed investments in order to get your R&D up and running. Where it becomes very difficult is to get a few millions, a few dozen of millions, or sometimes 100, in order to get beyond the FID stage, so the final investment decision stage. And once you get there, life is different. Usually you get a backup, and that's because you get much more certainty on the project. What we, and I can share, not just as Impact, but as a financial institutions, we're looking at that very closely. What I didn't mention is I'm also co-leading an initiative in Europe for the scaling up of eSAF, together with Breakthrough Energy and other investors, to see what would be required for eSAF to be produced in Europe, which some people may think that it's irrational because potentially That's not where you're going to find the cheapest electricity cost, which is an important parameter. But the good thing about Europe is you also have policies, regulation, commissions, and funds that can be available for subsidies potentially, if it makes sense for Europe to chip in that. Now, what we are seeing today is other projects, apart from the one that was mentioned in the question, that are taken off. And Natixis at the bank and a group of other banks are now looking seriously at the final stage to fund with debt a SAF project. You're probably aware also that there are some equity pockets, equity funds that have been invested over the last couple of years, either with airlines or with OEMs. The banks are coming on top of that. And one key rationale for us for lenders to make that call at the end is to get certainty on execution. The project we're seeing here that is picking up usually is the airline, basically providing the certainty. Providing certainty in bringing a bit of flex on the offtake contracts, bringing the certainty that whatever the cost of the underlying SAF, they're going to be here to take it. We're not talking about billions, really. We're talking about smaller amounts than that, just to make sure that the project goes up and running. I think that's very important. In this project, maybe it's offtake. In another project, it's going to be certainty of having the right subsidy at the right time. And I can tell you a couple of other examples of SAF projects that are going sideways just because of that, because they're not getting this small amount of money at the right time, and they have a very short runway. So I wouldn't say that the project that collapsed was not right. I think the technology was right. The way it was built was completely the way it should be. Then it's a question of scale. How quickly can you scale compared to the capital that you're going to attract? And that's always the question mark for those startups and entrepreneurs, is they want to go big quick to secure market share, but going too quick sometimes forces you to fall.
Okay, thank you. We have a question from Kevin. He says, hi, Professor Conlon and Mr. Chedeville. My name is Kevin. I am an ISTAT scholarship awardee at the Institute of Air and Space Law at Leiden University. I have a question. Would the form available finance also accessible to manufacturers? And if so, would there be any certain MRV on ensuring that the environmental claim from the aircraft is indeed as claimed, thus not constitutes greenwashing? So this is what kind of sustainability-linked financing would be available to the OEMs?
I think it's a great question. It's at the center of what we're discussing here. We have the guts of $1 trillion worth of capital that is going into evolutionary technology. If you look at the volumes that are being spent on research and development, it's about $15 billion per annum among the OEMs. So very small relative to this. So it's a real challenge. How do we scale this up? And I suppose a challenge in all of this is that jet fuel, if you take SAF as a substitute for jet fuel is a reasonably small space. About $200 to $250 billion per annum is spent on jet fuel. So it might seem like a lot of money, but to put it in perspective, the annual revenues of Apple alone, so one single company, is about $380 billion. So trying to incentivize capital to come into this space is reasonably difficult because of the inherent lack of scalability. You're never going to have businesses that are trillion-dollar businesses. So to answer your question, yes, there's going to need to be availability of capital to manufacturers. And this might be, for example, on the technology side. So we think about hydrogen aircraft. Some say hydrogen aircraft aren't the solution. They may never come out. it's our view that we need to incentivize all the different options that might be available. So hydrogen might be a low probability, high success outcome. If we can finance lots of different approaches like this, hopefully we'll find the one that actually works, the one that's going to change aviation and allow aviation to get towards net zero. In relation to your second part about MRV, which I think you mean measuring, reporting and validating,
Okay.
this is absolutely part of it. And if we go back to the principles that were proposed at the stock take last week, one of the things that we were proposing is to promote aviation sustainability measurement, reporting, and communication. So this is central to what we're trying to do. As I referred to earlier, about 80% of airlines currently don't report their emissions. One of the key levers that we think is available to impact is to encourage reporting. So if you were entering into a financing contract using the milestone method, it would be a requirement that you reveal your emissions as an airline. In terms of greenwashing, we'd hope that the milestone approach is greenwashing proof. It's asking airlines to reveal their absolute emissions. And these absolute emissions can be inferred from jet fuel, the usage of jet fuel. And it's very simple to do so. We have a multiplier that allows us to take the amount of jet fuel and figure out what emissions are what carbon emissions are associated with it. So in that sense, greenwashing should be eliminated. John, anything to add to that?
Not really. I mean, I think it's you've said it all, but I would say just that the risk of greenwashing is a pillar of all this thinking. I mean, it's at the heart of the discussion all the time. And that's the purpose why we're building those standards and why everybody is happy to meet in one room to talk about it and how to get those variables plugged together. It's to avoid having a void somewhere that creates uncertainty and potentially this risk of reputation, of greenwashing, or whatever.
Yeah. One thing I saw, which is a little bit of a setback here, is that if you compare the average age of the commercial fleet in 2018 to the average age of today's active fleet, the average age has gone up by 2 years, which is a bit concerning because that is probably suggests that there is a lesser degree of efficiency at the fleet today than it was in 2018. So it's almost like one step forward and 2 steps back.
And some of this may be attributable to COVID and the supply chains and so on, and the OEMs haven't been able to provide airlines at the pace that was originally anticipated to replace the fleet that's out there.
Yeah. And but it's also a little bit sad to see now Boeing is having some real challenges. Went through a strike. They've had problems with several of their programs. The 777-9 is delayed to certification. And you know, their profitability has been quite weak. So the question is, where is the money to develop the next technology that will bring more fuel efficient aircraft?
I mean, clearly, it's what we see is the OEMs, airframe and engine OEMs have invested a lot in the current new technologies, and to invest again to something very disruptive is going to require a lot of capital. I think at the moment it's still at the testing stage, so they are testing different things. They are testing hydrogen aircraft, obviously. They're testing electrical aircraft. They're testing so the hybrid structures. But the reality is a big number of aircraft will not be electric tomorrow, or not even in 2050. So what we are focusing on at the moment is really what are the levers we can pull today. And the levers we can pull today is incentivize everyone to focus on better operations, and that's probably airlines can do that. And then it's production of SAF. Yeah. So efficiency of operations. Refleeting is one part. There are probably other kind of small things, but all these small things stacked on top of each other at the end make a difference. And then the production of SAF is going to be a big thing. There was a question about the quality of SAF and then what SAF produce, which kind of CO2. At the end, it's the different technology will have different impacts with some variables, but the reality is it's better than nothing. And today it's IFA. There's probably a limited feedstock for that kind of technology, or the volume to be produced will be limited. But that's the first one available. Then there's going to be alcohol to jet and potentially hydrogen-based, green hydrogen-based fuel down the road. The projects are there. The technology is known. The scalability of some of them remains a question mark, and that's probably why we see not enough capital coming in at the moment.
Yeah. Kevin has another question. He said he also learned that one of the issues faced by airlines is that not all passengers have awareness on the issue of sustainability. Passengers still very much consider the price of the ticket. How the sustainable finance could address this issue?
So that's a very good point. I'll let Tom comment, but one thing, I think it all comes from passenger behavior. I mean, I'd love to do a kind of test on this call and have everybody to raise their hand if we were in a physical room and see how many people are paying for the green part of their, or the carbon offset of their ticket when they buy a ticket. I think the number will be unfortunately very limited. And then you ask the question about people about would you take a non-stop flight that costs you maybe a few €100 more, US dollar more, or would you take for a lower price a flight with a stopover? Many people will say, if I'm not on business and I'm on leisure and I'm cautious about, and I travel with the whole family, doing a stopover is probably a cheaper option, and I'll vote for that one. But then your carbon footprint is very, very different. So again, passenger behavior and awareness is an important piece.
Yeah.
Over to you, Tom.
Yeah, my view on this isn't usually popular in an aviation grouping. Jet fuel is not really sufficiently taxed. If you look at the rules surrounding jet fuel and the taxation of jet fuel, this goes back to agreements that were signed in the 1930s and 1940s. Yeah. So the amount of tax that we pay on jet fuel is a fraction of what you pay if you're driving your car or your motorbike or whatever it might be. If jet fuel was adequately taxed, and if you had the polluter pays principle in place, where you're actually paying the cost of the emissions that are associated with your travel, I believe what would happen is that the price of jet fuel would begin to converge on the price of sustainable aviation fuel, and that would potentially make sustainable aviation fuel more reasonable and more investable or more bankable. Yeah. So not a popular response, but that's the economist's view on it.
No, but I mean, you've got to ask yourself the question, why are taxes so high on petrol and automobiles, but it's no tax on jet fuel?
Yeah.
I mean, it doesn't make any sense.
No, it doesn't.
But this brings up the whole question of how we're going to reach net zero. I mean, what are the what is in the toolkit that we have to actually get people to use SAF? I understand SAF today is about 4 times the cost of jet fuel, right?
Yeah.
Now, who is going to pay for it, and how are we going to agree between nations of how to force this into regulation?
So I know that you have different answers depending on where people are taking this call. If they are sitting in the US or in Europe or elsewhere in the world. But we'll see what happened in the US when Trump walks into the White House. But it's what we're hearing is nothing should change there. Production of SAF is mostly in the southern states. Lots of jobs are at stake. Very unlikely that the states will want a federal rule to change what the dynamic that has been launched over there thanks to the IRA. What we see also so production of SAF hopefully continue to scale up, and with the economy of scale, the price will go down. Then in Europe, the European Commission has put in place a fund to help airlines basically to buy SAF, and they will refund airlines the price difference between Jet A and SAF, which is enormous. I mean, that's quite a game changer. While we used to see Europe as the regulators that use the stick versus the carrots that we could see in the US, Europe is now changing its stance, and there's this fund available to make sure that airlines are actually signing for offtakes, because they have certainty that they're gonna pay the price of Jet A for a portion of the SAF that they buy using that scheme, and that helps the SAF producers to get visibility also on their revenues, because they have enough takers that can potentially have a little bit of flex on their pricing as well. So it's a group effort, and today we are at the true beginning. If you remember, that's a different analogy, but you remember the production of electricity through solar plants, like 20 years ago, 30 years ago, that was not economically viable.
Yeah.
And today, this is the cheapest electricity in the world.
Yeah.
So let's have faith in technology. Let's have faith in our ability to build business.
Yeah.
But for that, we also need the support of our policymakers, it being in the US, in Europe, and in various countries.
Mm-hmm. Yeah. There are no more questions from the audience. So I want to thank our listeners for having dialed in, and I want to thank our speakers for having prepared this presentation. Very interesting. And then this is the last Learning Lab for the year with ISTAT, but check in at istat.org early next year for more content in the new year. And with that, I want to wish everybody a happy holiday season, happy new year, and see you back. Thank you so much.
Thank you.
Thanks.
Thank you, Niels.